Like I explained in my vlog yesterday, I want to make a big bet on gold stocks. Today is Friday, May 7th, 2021, and today is the day that I set as the date for those purchases. I was hoping that we'd see a great US non-farm payroll report, which is the single most important economic report in the world, because my reasoning was if this number is really good, then gold should sell off, and that would allow me to buy my gold stocks more inexpensively. And indeed, it was looking really good. Expectations were high. Most economists predicted that we'd see at least 1 million new jobs created.
We've got a blockbuster jobs report that's expected today. According to Dow Jones, economists are looking for a gain of about 1 million jobs in April. One of our next guests is forecasting double that amount, 2.1 million jobs.
So I got up nice and early, very excited, and waited for the report to come in. At the moment, the gold price is pretty much unchanged from yesterday at about $1,820. And I'm hoping for this number to drop a lot, drop as much as possible so that I can buy in more cheaply. The US 10-year Treasury bill also pretty much unchanged at 1.573, and I would expect this number to go up, maybe break through 1.6 again in anticipation of tighter monetary policy after this strong jobs report. But then what actually happened was this.
Let's go to Yahoo Finance's Jessica Smith, who has the numbers for us here on this April jobs report. Jess.
Yeah, Miles, non-farm payrolls rose by 266,000 in April, way below expectations.
Oh no, so unfortunately, we got a huge miss. So employment rose by only 266,000 jobs in April, as opposed to the estimated million.
It looks like it was a big disappointment at 266.
And prior to the pandemic, we had job openings and labor turnover less than it is now. It was 7.15 million then. It's 7.367 now. So when you tie it all up, we're not drawing enough people in. A hugely disappointing number.
And so as a consequence, the exact opposite of what I expected happened. Gold, instead of falling, rising sharply, up now to 1838, which means I will not get to buy my gold shares cheaply, but I will have to pay even more for them, which is a real shame. Here is the development of the US 10-year Treasury note for today. And you can see this V-shaped dip when the jobs report came out. That should have been a spike, and then gold would have dropped, and that's what I anticipated. So I think I was actually sort of correct on what would happen if there was a good jobs report. I was just wrong on what actually happened with the jobs report. So in the end, I went to my online trading platform, and with a heavy heart, I bought a bunch of gold miners, namely the ones you can see here in this table. And I will now just go through them and list them. So I put about £1,000 each into the large Canadian gold miners Barrick Gold, Agnico Eagle, Kinross, and Yamana. They have a market capitalization of about 42, 17, 10, and $5 billion. So they're pretty big. They're also, I think, really well run. They pay a nice dividend of about 2%. And I have high hopes for those stocks. They're sort of the blue chip. They're relatively safe. They're well known. And then I bought 4 other companies that are smaller cap. They are not so well known, much more risky. The first one is Anglo Gold Ashanti. They're actually also relatively big, but they're in South Africa and so have a bit more risk, also currency risk. The next one is Hecla Mining, a US company. And then Jaguar Mining, that actually turned out really badly today. The stock is already down 5% just today. And then finally, Trans-Siberian Gold, which is traded at the London Stock Exchange, but they actually have a gold mine in Russia. That's the smallest one, also pays the higher dividend, but is obviously very volatile and very risky. And I put about £750 into each of those. Then finally, I also bought some extra shares of my best performing stock so far, Rio Tinto. It's been on fire. It's performed really well. So I'm averaging up. I am buying some additional shares, even though that will dilute the earnings or the gains that I've had so far. So the fees I had to pay are a bit high. I put in £134 in fees, and in total I paid £7,846. Those are basically my savings from my Swiss bank account, which I all transferred to the UK now. So it's a big bet for me. About 2/3 of all of my investments are now in this one sector, in this gold play, in the idea that higher inflation should propel gold to new highs. So there you go. Those 8 gold stocks are now in my portfolio, and hopefully my strategy will work out. So that's basically my update for today. I did what I said I would do and put a large sum of money, at least by my standards, on the inflation card by buying a bunch of gold mining companies. Yeah, I have to say I'm a bit annoyed by the bad timing. You know, there's a very good chance that come Monday, these stocks will just drop again. I mean, we've had a big move. We're up $50 over just 2 days. That's quite a lot. And usually those are, followed by a bit of a drop. And, I had plans to buy these companies on Wednesday, but then I thought, oh, well, let me just make a video and then I will buy them later. And so, if it wasn't for these vlogs, if I just bought the things I want to buy without journaling all my decisions at the same time, I would already be up. I would already have made some nice gains on this idea. So, that's a bit annoying. So I think what I need to do is just let it rest for 2 or 3 months. Don't even look at it, just ignore it, because the fluctuations, the volatility are going to continue, I think, as the market is trying to figure out if inflation is going to continue or if the Fed eventually is going to be more aggressive. So there will be large pullbacks in these stocks, I think, maybe even a correction. I could be down 10% at some point. I just have to ignore all of this and just trust that my outlook is more or less correct. And I think, yeah, it's for that reason that I'm actually kind of happy with these investments. I think it's a really good space to be invested in. It's a really good opportunity. Yeah, I think gold price could go to maybe $2,000, $2,100 by the end of the year. So that's really good. That would mean that my investment would go much higher. So there is real good opportunity here, real potential for substantial upside and great returns.